Well, hello and welcome to Taking Stock, the show where we take stock of the week gone by and prepare you for the next trading week. The next week is going to be important because Monday morning we have the biggest event of the calendar year, the Union Budget. The market this week, of course, didn't do too well, but on Friday we had a bit of a rally. Let's see if that continues. Hi, Sonia.
Hi, Anuj. Yes, of course, the market fell 2.5% in this week gone by. And a lot of big stocks, ICICI Bank, Bajaj Auto fell about 7 to 10%. So the positioning ahead of the budget, give and take everything, has been quite downbeat.
Yes, I think the question you have to ask yourself is that will the budget be a trigger for the next round of market fall? Because sitting here, you don't see too many triggers on the upside for the market, even though the market is oversold. And also, Sonia, our market is beginning to underperform the global market. So let's see, once the budget is out, if there's any kind of path-breaking event that could change the domestic sentiment. At least that's what the big hope is. The other thing which happened this week was that mid-cap started to underperform. Even today, for example, we had big rally in the large cap indices, but the breadth was poor, and the recovery was led by the weak stock. So budget is important, but it would be 1 or 2 day event. After that, you got to keep an eye on the global cues again.
Oh yes, and this market so far has been a sell on every rally market. That's what we've been seeing up until now. So I guess that trend will continue, budget or no budget. But joining us on the show today, we have Neelkant Mishra, Head of Equity Strategy at Credit Suisse, and we have Ashwini Gujral as well. Gentlemen, thank you for joining us on the show. First up, let me start off with you, Ashwini. What is the expectation as far as the setup ahead of the budget is concerned? You've been telling us through the course of the week that, one should use every rally to sell into the market. Would that orientation continue in the budget week as well?
Well, the market is weak, there's no question about it. But what happens is that ahead of such events, when the market is falling before them, just because the uncertainty is over, sometimes you see a pullback rally. So even if it's a lukewarm budget and nothing really negative or positive, you could have a pullback rally because, nothing negative happened. But overall, longer term, the trend would continue on the downside. And if there is a, policy mistake or something, then obviously it will be the trigger which will lead to big decline. So overall, the technical position is weak. Now the question is whether we rally a bit and then fall, or we fall straight away, post the budget. So that is the only thing that needs to be seen. An average budget will probably induce some 150, 200 point rally, and I wouldn't be surprised by that.
Okay, so Ashwini, in that case, what are the points that you're looking at for the Nifty? A, for any kind of short covering bounce post budget, and B, your eventual targets on the Nifty in this round of downtick that we're likely to see.
Very simple stuff that's been bashed up will tend to have the biggest pullbacks. So PSU banks, metals, etc. All of these stocks, even private banks to some extent. Basically, Bank Nifty will have the biggest pullback. And once, the 6850 goes, I think you can easily take 400 points lower. So 6450 thereabout should be the eventual target or the next target here from here. And on the upside, I think 7250, 7300 will be difficult to cross, even if it's a decent budget.
Okay, so give us a couple of stocks, Ashwini, stocks that you would either go short or long on ahead of the budget. And more importantly, tell us, before the budget speech, should you square off any of your positions?
See, generally before the budget, the social sector, hospital, fertilizer, these kind of stocks, they tend to do well. Maybe, some sort of pullback could also happen in the housing finance, which has started today. But overall, the stocks that you would look at is probably IGL. That's a buy with a stop of 510, target of 545 on the buy side. And Union Bank is a sell with a stop of 112, target of 100, because chances are whatever he comes up with in terms of recap will probably be short of market expectation.
All right, Ashwini, thanks a lot for your time today. Have a good evening, and we'll talk to you on the budget day now. So that's the technical setup. But what about the fundamentals and expectations from the budget? We have Neelkant Mishra now from Credit Suisse joining us. Neelkant, hi, good to have you on the show. So first up, that big question, what are the top expectations from the budget?
I think the first is that the fiscal deficit target of 3.5% should be maintained, and I think the fiscal consolidation path should be continued with. The second is that there should not be any cuts to the government-related capex, the government contribution to railways, to roads, and thirdly, that this should be funded through much more prudent disinvestment, which is something that the government missed out on this year. If you raise taxes and then spend it on development capex, it's actually a typical case of two-handed economics, because you're taxing something and this and that. Instead, if you just disinvest and then spend it on development capex, that acts as a growth catalyst.
Okay, so disinvest and then spend that on development capex. But where do you see the government getting more money, and where can they cut off expenses or reduce expenses?
Look, if the current rates of excise on petrol and diesel were to continue, you are going to see an extra 73,000 crores of excise come through for the center. And that's a very big number. I also think that with prudent disinvestment, which is something that the government really slipped up on this time, sale of Sooty stake, and these are actually very hard to understand why the government cannot meet these targets. So with these kind of numbers, I think, and with the expectation of GST coming in over the next year or so, a bump up in the service tax rates, I think there can be a fair bit of revenues that can come in for the government. There is also likely to be some spectrum sale, which can deliver an extra maybe 5,000-10,000 crores. On the expenditure side, the sharpest increase will be on the pay commission. There is also, I think, expectation that the food subsidy bill will go up. There is also likely to be some scheme on health insurance, and it will be interesting to see how the health insurance scheme gets funded. But if you just play with the numbers that I talked about, I think you can still arrive at a 3.5% number. Either way, some of these targets are more top-down. I mean, it is a policy decision taken right at the highest level as to whether India does want to renege on its promises made in the past few years of 3.5%. And my sense is that they will stick to that.
Okay, but history teaches us that the government has never been able to meet divestment target, Neelkant. Last year is the prime example. Are you still hopeful?
So I see this as a bureaucratic problem. I mean, the absence of any further information on why exactly this is not happening. I mean, I don't see any reason why something like Sooty cannot be sold down. I don't see any reason why there cannot be a further sell down on some of the larger, higher cap, market cap PSUs. And if you approach it on mission mode, you think that this is very important. I mean, I think it is very hard to understand that the government meets its tax targets, which are actually somewhat to do with projections, and something that should be ideally completely in its control, irrespective of prices. I mean, if Coal India had been sold off in the first quarter itself, they would have got a much better pricing. And you can't really wait for good pricing. I mean, I've been waiting for, say, Steel Authority sale, if you remember. At one point, they were trying to sell it at 240, then 200, then 180, and now the stock's at 40. So you can't keep waiting. If you have a target, you need to sell off, you just go ahead and sell off. And I think if you manage it well, and you do it very, very smartly, I think you will get a good price as well. So this is something that is, and this government actually, when it puts its mind to it, is very good at execution.
So do you think the introduction of the long-term capital gains tax will be taken very badly by the market?
See, near-term volatility on how sentiment gets affected is very hard to predict. We saw what happened on the LTCG on the fixed income products last year. There was a doomsday prediction for a few weeks, and then things finally the market settled down. I suspect that any changes or lack of changes would be absorbed by the market in that way. I think fundamentally the catalysts outside India are much more important for the market, and I also think that the state budgets, which are now getting bigger and bigger, so you would have seen that UP has presented a 3,50,000 crore budget. The central government will be presenting maybe a 17 lakh, 18 lakh crore budget. It's a big number, and Jharkhand's expenditure this year in FY17 is projected to be 16% higher than what it was last year. So there are big numbers coming out of state budgets, and I think their impact on the ground is going to be much more important. So we need to track those as well. I think the union budget by itself does not matter as much for fundamentals as people think.
What about subsidies, Neelkant? We have the oil equation sorted, but what about the rest of subsidy math?
See, I think on the oil side, not much needs to be said. On the fertilizer side, yes, I think there is a scope for subsidies to come down, given that global energy prices have come down. On the food side, instead, from what I read in the papers, it seems that the government is very intent on substantially increasing and implementing the Food Security Act. This is something that the government, even during the campaign phase before May 14, was actually committing to. So this is not really a surprise. Some people do seem to be surprised that the government is doing this. If you go through what the campaign speeches were, I don't think this is a surprise. So let's see how exactly it's implemented. There is likely to be more announcement on this because the biggest fear is leakages in this scheme as to how the government goes about addressing those leakages. If these leakages are addressed, then I think given the stress in the agricultural side of the economy, perhaps this may even be supportive of growth.
All right. Any particular sectors that you're watching closely in this budget, Neelkant?
As I said, I think the budget has very limited impact on the economy, but I do think that if the government was to give, say, incentive on the housing sector, so there's not one sector really, so there can be NBFCs that benefit. If the pay commission is implemented properly, it can affect the NBFCs that lend in the housing sector, the home improvement companies. There can be, let's see what the announcements are on the banking side, though I think that the eventual solution is still being worked upon. But if the finance minister makes some announcements on the recapitalization of banks, if that quantum is being increased, I think those would be the two important things that I would look out for.
Okay, Neelkant, we don't have to wait too long. In about less than 3 days from now, we'll know what's on the mind of the finance minister. Let's take a break on that note. But as we do that, let's listen into some more budget expectations from some of the prominent market voices that we heard through the course of the week.
First is continuing the path of fiscal consolidation. It's very important. Second is, I think there has to be a continuing focus on infrastructure spending. And finally, a little bit for the rural economy. I think that's low-hanging fruit for the government, and maybe they could do a little bit there to revive the rural economy.
We have seen 2-3 disappointments in the past in terms of budgetary, announcements and all. So I actually don't expect anything from the budget personally, but it is going to be a big. I mean, if you see the last speech of in the summit recently, it is looking as if something dramatic is being done in this budget.
There is a lot of tax already. On top of that, in this kind of sentiment, if you talk of another tax, which is long-term capital gains, obviously it will scoop fears in people's mind. And I just wish and pray that that something like that doesn't happen. Because if that happens, I don't know what is the real long-term impact of that. But in the short term, it will be disastrous.
The markets will react to what choices we make in the budget. If the choice we make in the budget is related to, let's say, increased taxes, increased borrowing program, do away with capital gains tax on the stock market, and so on and so forth, then surely markets' reaction will be negative. If the government makes a dream budget like we had seen in 1997, then can the market take off? My feeling is that yes, the markets can take off. And I don't see a reason why we should assume that the budget will be negative for economy. It might as well be the trigger for being positive to the